Hey, what's going on? What's going on? My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. And today I am actually shooting a special video. I want to share with you about a tax situation I just heard about, and just really share from you from a tax professional's perspective. I don't know if you've seen it. If you're familiar with the internet marketing world, you may know the name of Chris Record. Chris Record is a fantastic marketer, internet marketer, and just a phenomenal guy. So he made this video talking about his tax situation. And so what I want to do is kind of go through everything with you from the tax perspective to let you know how these things happen and what you can do to avoid it. So going through this video, this is not a knock or a judgment on anyone, okay? Because this happens more often than you think. And so with that, let's get started. All right, so nuts and bolts is, it boiled down to, I got my notes here, it boiled down to, you know what, he's in a lot of tax trouble, and it's something that's been building up over quite a few years. And so I just want to go through everything that happened. The link to his video will be in the description so you can hear from him in his own words, but I'm just going to go through some things. Okay, so the first thing he talks about getting started, back in 2004, 2005, at some point he started making a six-figure income, and at some point a seven-figure income. And believe me, some of that income was mine because I did buy some of his products, okay? So let me be real. This is why I know of him, and I've actually met him in person once. Just like I said, just a phenomenal guy. Okay, so the first thing is that he had no record keeping. Okay, so one of the things I talk about is knowing the rules. When it comes down to having your business deductions, you have to have the records to prove those deductions. So that means having a receipt, not a line item in your bank statement or on your credit card statement, but the actual receipt. Because what the actual receipt does is tell you the place, the date and time. It tells you how much was spent. You can make notes on the receipt as to what the expense was for and all of that. That is what documents your expenses, not a line item on your bank statement or your credit card, okay? And then he had no way of knowing if he had business expenses or personal expenses, which said to me that there was no separation of business money from personal money, excuse me. So when you are having a business, okay, when you have a business, you need to separate your business money from your personal money. You need to have a revenue account where all of your money goes. You need to pay yourself a set amount. You need to set aside money for taxes. I'm going to get to that in just a moment, but you need to have a separation of your funds so that you know what's your money and what is business money, okay? Mushing it all together is no separation. And what that's called on a legal level is called commingling of funds. And generally, it's, when you're talking about a sole proprietorship, generally it's not that big a deal until somebody sues you, right? Because see, then with commingling of funds, that says that there's no separation from the business and the personal. And so if someone chooses to sue you, there will not only get attached your business assets, but also your personal assets. So it's really critical that you understand that having a separation of the money and how you run the business is what establishes you as a business versus just somebody running a business. Okay, so please understand that. Okay, so he didn't have any record keeping. So then he pulled out cash. All right. So again, there was money that landed in his bank account, and he went to the ATM and pulled out cash. You can't trace cash. So even if he had a bank statement or anything, what happened to this money or happened with this money would have been still, there's nothing, because when you operate in cash and you don't keep the receipts, then you have nothing to substantiate those expenses. He had no information. The other thing he states is that he did not file taxes. Not only did he not pay, he did not file. So let me talk about that for a moment. When you don't file your taxes, there is no statute of limitations for the IRS, okay? Because normally you hear, well, the IRS can go back and audit you 3 years. Well, if you don't file, that 3 years is null and void. And if they suspect you of tax evasion or something fraudulent, that 3 years goes out the window as well. So they can go back to whenever the last time was that you filed and then build a case against you from there. So not filing is not a good idea, because not only that, he didn't file, he didn't pay. So I'm not sure, based on when he, talking about this, when was the last time he filed, but when you don't file, you get a failure to file penalty, you get a failure to pay penalty, you get interest that is compounding, that racks up on all of this stuff. So it goes back to whenever he filed last, and every year up until then he didn't file. That failure to file penalty keeps continuing to rack up interest and also rack up penalties. Okay, nuts and bolts is he procrastinated, because he said his thought process was that, okay, well, I can't fool with this right now, I'll just go make some more money, then I'll hire somebody to fix it. And then the time kept going on and on and on until he starts getting letters from the IRS. Now, when you get a letter from the IRS, the last thing you want to do is ignore the letter from the IRS, okay? Because the letter is going to tell you exactly what needs to happen. They're going to tell you by when you need to respond. They're going to tell you, if you're being assessed a penalty, they're going to tell you how much it is. They're going to tell you how long you got to pay. They're going to tell you everything in that letter. So do not ignore the letter from the IRS. That is the absolute worst thing that you can do. So he got the letter to assess that showed that he was going to assess the penalty, and then he hired an accountant. Now, that was the right thing to do, but unfortunately his accountant died. I cannot believe that, but hey, you know what? No, tomorrow is promised to no one. So this died, his accountant died. So he was trying to get this fixed, but in the process, the accountant died. It was a mess. Watch the video if you really want to know the details on that. But anywho, so over the next few years, he pretty much made $1 million. This is what he said, okay? But he made $1 million not filing, not paying taxes, okay? So he got a letter basically assessing him about $500,000 in penalties and fees, okay? So now let me talk about that, because what happens is this: when you are, if you are a affiliate marketer, if you are self-employed or whatnot, if someone pays you over $600, let's say you get over $600 in affiliate commissions, like Chris got way more than $600 in affiliate commissions, okay? But you get a 1099 miscellaneous. That 1099 miscellaneous comes to you. One also goes to the IRS. Chris also taught e-commerce, okay? When you have third-party payment settlement entities, those are your Amazons, your PayPals, okay? If you have 200 transactions and $20,000 in transactions, then a 1099K gets sent to the IRS, also gets sent to you. Now, what that does is that tells the IRS how much money that they sent you, how much of your gross income that you earned. It doesn't take into account any of your expenses. So, if you're in e-commerce, you may have made $200,000 gross, but you may have spent $100,000 between Amazon fees, your cost of your goods, if you're doing FBA, all of that. So you might have $100,000 in expenses, but they don't report that. They just report the money. So as far as the IRS is concerned, you made $200,000 in revenue, and you paid no taxes on that $200,000. So I hope that's making sense with that and explaining that correctly. So these payment settlement entities have a responsibility to report your income, and you have the responsibility of reporting your expenses, okay? So if you don't do that, then as far as the IRS is concerned, you made all this money and you owe, all right? So what happens then? So then what happened is they levied his bank accounts. I know you've seen the commercials, like, if you owe the IRS $10,000 or more, call us. The reason that the $10,000 is the magic number is because at $10,000, the IRS can levy your property, your bank accounts. They can put liens against your homes, all of this stuff. And this is what happened to him, because he had $90,000 sitting in PayPal to run his business, and the IRS dipped in and took it all. Okay, because remember, they have assessed that he owes $500,000 in taxes. He had $90,000 sitting in a bank account, and they reached in and took it. And they could legally do so because that's the law. That's the law. And if he had not responded to them or worked anything out with them, and that's what he said he had not worked out any payment plans, he had not filed taxes and all of this stuff. So he didn't do anything. And so the IRS says, cool, if you're not going to file, if you're not going to pay, we're just going to go get our money. That's when they can come and levy your bank accounts. They can garnish your wages, all of that stuff in order to pay off this tax debt. All right? Because it's going to happen. So, and he talked about it. He's like, you know what? He was young. He had new money. He was, spending it all because, you see him on social media. You got the big house. You're bossing out. You got the car and all this stuff. Please, can I tell you to stop putting all of your stuff on social media? The IRS uses your social media to help build a case against you, okay? I just need for you all to understand that. So nuts and bolts is he made all this money, he didn't file taxes, and he didn't pay taxes, and then he didn't respond to the IRS. So that is what causes this big, perfect storm of tax hell, all right? And so what I want you to understand too is that when an IRS places a lien on your stuff, okay, this goes on your credit report, all right? And he talks about it. He can't finance a car, he can't buy a house, he can't get anything. He's struggling to qualify for merchant accounts and all of that stuff. Why? Because when the IRS puts a tax lien on your stuff, that means that they got dibs to every cent that comes in until your tax bill is paid. So nobody is going to loan you money knowing that any money that you make, you're not going to be able to pay them back because the IRS has got dibs on this money. All right? So, the other thing that he said too, which I wish he would not have said, is that while he was in this tax trouble, he found ways to operate on a cash basis. That, my friends, is tax evasion. Okay, because if you are really trying to circumvent the IRS from getting their money, that's tax evasion. If you are trying to operate on a cash basis so that you don't have to pay taxes on that money, that's tax evasion. You can't do that. All right, so this is why it's important for you to understand that even though operating in cash, the IRS is going to find out, because like I said, you have all these other reporting type of requirements from other people. So those third-party entities, they have a legal requirement to report these things to the IRS. And so then when it catches up to you, because they have what's called an automated reporting system. So they get these forms in the 1099-Ks, the W-2s, the 1099 miscellaneous, and so they're waiting for you to file taxes to match that up. And then if it doesn't match up, IRS goes, we got this sitting here, and we haven't gotten a match yet. So they might not say anything year 1, year 2, year 3, but if it sits there long enough, they're going to say something, and then it's going to come with a tax bill. Because like I said, that magic number is $10,000. When you owe more than $10,000, they can place a lien on your stuff. So I've been going on for about 13 minutes going through this whole thing. What is the takeaway for you? The takeaway for you is, 1, to talk to a professional. There are so many people, that I've talked to. Why haven't you talked to a professional? They feel like they can't afford it. They feel like it's a rich person's thing. They feel like they haven't made enough money. All these excuses. Let me tell you something. Your tax professionals and your accountants are the people that are going to help you keep the money you make and help keep you compliant, okay? They're going to help you set aside money for taxes. These are the things that you have to discipline yourself to do. When you are your own boss, when you are a business person, you have to understand that you have a responsibility. You are not a W-2 wage earner where you have withholdings and such. You have to do your own withholdings. Okay, you have to set aside this money to pay the IRS. You just do. Nobody likes to pay taxes, but the worst thing you can do is to rack up a tax debt and not be able to pay it, because then you wind up in this tax trouble. This is a personal responsibility issue. Ignorance is not an excuse for the IRS. I spent the money is not an excuse for the IRS. When you rack up a tax debt, you got to pay it, or you know what? They're coming for your stuff. So my charge to you today, if you don't have a tax professional, book a call with me. Let's get you set up the right way so that then you can go forward on, in good footing with the IRS, so that you can be prepared to pay your taxes, so that you can be prepared if you need to make a payment plan. If you haven't filed, it's time to get right. It's time to get that stuff caught up, because if the IRS comes to you, it's not going to be good. It just isn't. Okay, so there'll be a link in the description for you to book a consult if you don't have a tax professional. If you do have a tax professional, CPA, go call them, schedule an appointment, make that investment to talk to them to help you get your situation straight. Okay, don't go down the same road that Chris Record has gone down, because it is not pretty. I wish Chris the best. I know this will work out for him in the end, but right now it's just ugly. Okay, so thank you guys so much for tuning in. I hope you got some value from this, and I will see you next time. Bye.